Yes, sir. We're back. Good morning, fam. Good afternoon, good evening for some of you guys. For me, beautiful Thursday evening already. The week is flying. The time is going fast. Hope you guys enjoyed. Hope you guys had a little bit of time after the FOMC meeting. What a meeting it was. Well, actually quite a boring meeting overall. Nothing spectacular here, but the aftermath right now is absolutely interesting. We're going to talk about that here in a second. We have some very important news coming just now in regards to the euro. Okay, we have the monetary policy statement for the euro just coming out here. I had a small, long trade on the euro. We're going to talk about this in a second here. But today is the day where we're going to trade, where we're going to stream, and where we're going to make some money. Let's make some money. Press a win in the chat if we're going to make some money today. I'm excited. I'm full of energy. I hope you guys are ready for it too. Couple of important things that I want to share with you guys though. All right, before we start, I have to share with you guys a little bit of important things here. Well, first of all, we're going to have a giveaway again, of course. At the 500 likes and at the 700 likes, we do a $50 and a $50 giveaway. Total of $100 giveaway every single stream. And at every, let's say, 1,000 subscribers or something in Discord where we, reach a new milestone, we put something on top of that. All right. So if you want to join the movement, the beautiful community, smash that like button. Let's get started and let's set a good foundation for today's session so we can move forward from there. However, a couple of important things that I would like to discuss with you right now. And this is something a little bit more on the personal side here. Let me see if I can open the charts already. I think I can. There we go. It should be good. Let me head into the screen first, guys. If you won the giveaway, okay? And you understand that when I pretty much close my stream, it is roughly 2 a.m., sometimes 3 a.m., sometimes even later, okay? Take that in consideration. And you win the giveaway, and you send me a message like this right here, okay? I removed the name, obviously. And you start stressing straight away, and you start saying like, hey, are we gonna send it? Yes or no? It's simple. I've seen this multiple people do already to me. Then I am tempted not to send you any money, and I'm gonna send it to somebody else, okay? That's not how I play my game here. Stay smart and just stay respectful, okay? First of all, I'm extremely busy. We have a lot of other things to do as well here. Of course, you're gonna get your giveaway. This guy's gonna get his giveaway regardless. I just want to send out love here. But you have to respect the game, okay? Because then I'd rather give it to somebody else here. And if you don't believe that I'm gonna give you any money, then you're probably gonna be right. All right, just a heads up here. So play the game fair and square for everyone. Make sure you keep it nice and tight here, and I will get back to you. Okay? Yes, sometimes it can take a day or two, whatever it is, but I will get back to you. That's the word you get from my side. Okay? Thank you for that. Another thing that I would like to share with you guys very importantly is that yesterday there was something going on with black bull markets. And we talked about this, okay? We talked about the NASDAQ trade that we were literally explaining to you guys about here that I took. However, there was an issue with TradingView. And I found out eventually that this order actually came true. So I have to show you guys something right now that is absolutely important. This order came true. It hit our position actually perfectly, okay? We got perfectly triggered right there, and we made a massive amount of money here. Apparently, what happened was with black bull markets, there was a glitch where it didn't projected it on TradingView yet. It was active on MetaTrader, okay? So I didn't know that. And actually, I got very lucky as well, because if it went into my other direction, it could have been a completely different sentiment right now. But the good part is that I always put a stop loss. And my lesson to you is always, but always, just always put a stop loss, all right? No matter what your situation is, it's super important to do so, because sometimes it doesn't have to be your fault. It doesn't have to be your mistake. So this is kind of what saved me here. But let's get back into the charts right now. Let's go back into the history, because we made a lot of money yesterday with the NASDAQ position and a GJ trade here. Okay, we made around $10,000 on our NASDAQ buy. We were talking about already in our previous stream, the first stream of the evening yesterday, where we talked about what we wanted to see for the NASDAQ. We want to go out and we want to take out that liquidity below. That's the end goal. However, we wanted to see it coming up, tapping into that zone, and then coming back down here. It tapped into the point of control, and this is where we got wicked into to then massively come down towards. So it played out perfectly. However, I could not prove it to you guys because it was not there. All right, but now it's there. So now I can prove to you guys that we made a lot of money on that Nasdaq trade yesterday. This was just to give you guys more details. This was our gold trade that we took. Then we had a loss on the Euro GBP trade after that. And then we had that Nasdaq trade here. After that, we had 2 trades, a total of $10,000 there, and another $8,000 on GJ, where we also had a position on as well here when that came out, taking out the liquidity. And when we're talking about the liquidity here, okay, we had this move right there where we were building up the liquidity to the downside. Eventually the news came out. We entered, came up, almost hit our stop loss, but then came down into our direction and closed beautifully automatically right there, targeting us also a nice $8,000 profit. So overall, we made a massive win yesterday with the FOMC meeting and the aftermath right there. And I'm happy that I can prove to you right now that it's actually the case here, not just telling you that I did it, that I actually could see and show you that I did it, okay? The entry was perfect and clean. And again, the lesson that I want to give to you guys is, again, and it's so powerful right here. Look at the point of control. Use this tool a lot more, all right? The fixed range volume profile. Whenever you see a very clear range, it could be in crypto, it could be in SVDs, it could be in gold, whatever it is, tend to use consolidation areas, immediately look at where the volume is at. Use that tool, all right? That combination with supply and demand is extremely powerful, because if you look on the 30-minute chart, I saw that zone here, I saw this area of supply, and what happened? We of course tapped into that zone. The reason why I entered a little bit lower is because I didn't want to miss out kind of just there on the position. So I took a little bit of a wider stop loss as well, not just from that area of supply. But this is where I use the fixed volume profile to come back up, to look at the consolidation, the expansion, the retracement. And because there is liquidity below, I know, hey, they might pull back up to then pull price down to take out that liquidity below here. Okay, so that's the Nasdaq right there. Just again to show you guys exactly what we have been up to right here. So overall, we have been coming up massively. And then today we made also a trade, a sell on the EURUSD, sorry, a buy on the EURUSD. Another $2,000 right there, divided until we got stopped out here, which was there to when price turned around pretty much, when of course the monetary policy statement came out here for the ECB. All right. Very, very interesting though. No rate hike for the ECB here, okay, which caused the dollar to also react very, very heavily right now. And we came back up very, very quickly here. Look at that. We came back down, tapped into that zone perfectly, and then we made a massive move to the upside. So again, look at that beautiful reaction here. You saw this beautiful area of the month right now. It pulled back, news came out, and there we go. We went to the moon right here when the news came out right now. But when looking at the dollar, there is some negative news just coming out right now at this particular moment for the initial jobless claims here. Okay, a negative outcome. Okay, more people jobless, more claims. Pretty straightforward. All right, 2,000 more than expected, than the forecast was, but the previous was 229. So it's actually quite a significant increase here. Which should not be good for the dollar at the moment, but the dollar is shooting up here. Could also have to do here with the euro and everything that's going on that end as well here. Okay, euro coming down very heavily. All right, the dollar coming up very heavily. That means that EURUSD, gold, all of these charts are right now coming down pretty significantly. Gold is actually holding very well, but anyways, what an introduction it was. A lot of things were going on at the same time. Let's see what we have in the building here. What's going on with the family? Let's see what we have. Who we have here. All right. We have Cowboy, my man. Always here. Always present. Absolutely fantastic. Hope you're doing well. James. Fantastic that you're here. Frank. Amazing. Grook. 09. Fios. DS. Crefant. Khalid, yes sir. Chrono, my man. Arded, yes sir. Damon, 8-bit gamer, more cowboy, hope you're doing well. BK Ryo, yes sir. Protect Mar. The same people as always, which is always great to see here. Ruak, fantastic that you're here, my friend. Hope you're doing well, brother. Looking forward to host you tonight as well. Let's get some pips today. All right, let's do it. Vicky says 4 wins in a row since been learning from your patience. Amazing. Sam Lewis, your prediction on the Australian dollar Swiss franc worked. Okay, we will talk about this in a second here. Janal says Top G, Jackie Rusher, GT Wardle, Ariel, yo, yes sir. Let's get started, guys. Amazing. Okay, dollar bullish. That's not a question here. Yen is coming down, and not as much as that the dollar came up here. Even though we expect kind of a negative correlation, of course, we see the euro right now coming down as well. So again, we're going to see a massive turnaround for a lot of pairs right here, such as the EUR/USD. Of course, we didn't really know what to expect. I was actually long here, so got stopped out on the perfect moment, to be honest. Okay, when it's still in profit, of course. So we came up, we took this whole ride up, and then we reversed down. But you know, this correlation was actually super flawless right here. I don't know if you guys can see it right now, but if you look here on the EUR/USD, for example, and you have the dollar index on this side right here, then look at the actual correlation, the negative correlation that you could find here on the 30-minute chart here. It was actually super clean, or as clean as it can get here, because we knew that the dollar had a strong zone, we had a massive expansion, we came down, and the alignment was just significant right there. Okay, look at that positioning. You know, you just place a 30-minute aggressive order and you take it to the downside here. Again, it's a little bit risky, of course, during the news because anything can happen, right? But again, when looking at purely technicals right here, usually technicals do not lie, right? It's always a kind of a presentation here that you can that discover. It's pretty much when the technical analysis is always showing you stuff. You know, what tends to happen is with technical analysis and fundamental news is that technicals usually tend to represent the players that are playing the big league right here, because they're trying to lead you into one direction to then reverse price. It happens most of the time. I rarely see news coming out where price just keeps going to one direction. I see it usually happening that we turn some way or the other. So it's kind of interesting to look at. However, don't take that advice for granted for every single news event that you take here. That's not financial advice. Just always be aware of every chart and trying to find the perfect synchronization between the correlations. And you have trades like these here, you know, like the EUR/USD, which, you know, can be actually playing out very well as well when looking at the market here, okay? What we're going to do right now, of course, we have massive news here with Redfall, the news coming out. So in my opinion is right now to wait another like 15 minutes to then just see from there, okay? To then just see from there what's going on. As long as the volume is there, I'm happy. And we're gonna trade, and we're gonna actually, you know, really make some money together and continue our journey right now. Even though that tomorrow, of course, the most important day, because tomorrow we have the non-farm payrolls, all right? The biggest news pretty much out there. Okay, the NFP. So do take that in consideration. It's gonna be massive. It's gonna be important. So yeah, as long as the volume is good, we're gonna make some money. That's what we're gonna do. The last couple of trades we're really crushing it. So yeah, the last losing trade was the EUR/GBP. Yeah, EUR/GBP. Yeah, let's continue and you know, see what we can find here. Always in the place, killer today. Thank you, Frank. Really appreciate you, man. GG, what's good? Victoria Thomas says howdy. I'm here for Lorenzo, but GG, another good reason. Lorenzo, Canadian dollar just became stronger. Yeah, let's have a look at the Canadian dollar. Let's have a look at oil as well. What's going on that end. And that's also because the oil is starting to look much better than it did before. Look at oil. It came down and it had a massive, you know, expansion to the upside again. A very strong move to the upside. And now it's kind of chilling, coming back down. Are we going to come up further? Maybe that could represent or help with the strength of the Canadian dollar as well here. So we're definitely seeing that happening right now at the moment. And we're kind of feeling out right now, okay, which currencies are weak, which currencies are strong. Well, euro very weak, dollar strong. Was a matter of time, like we discussed yesterday already, where we talked about this beforehand. We also said that this Sunday open level is the most important level to take into consideration and to always keep out there. So this is the Sunday open. We're reaching right now towards the Sunday open right here. And it's Thursday, okay? Thursday could indicate a reversal day as well. So also be aware of that. I think it's going to be very, very interesting if the dollar will face some significant resistance around there. So if we're going to go up with this pace here, the more we go up, who knows? Who knows? Maybe we're going to come down again from there. Let's see what's going on happen. But, you know, we're looking for the synchronization. That's all we're looking for. You know, the dollar being at one point where we can flip in the short term to then see another flip happening after all. And based on that, we usually have our strategy, you know, adjusted to, okay? The VIX, also important. The VIX had a massive expansion. The volatility index important for the indices right here, okay? So right now we're starting to look a little bit weaker. We're starting to come get rejected internally underneath the zone here. The question is, are we going to hold below? Are we really going to come down here? Well, we have created an internal lower low as well right now, as you guys can see at this current moment. So it seems that this could be, you know, better or more functional for the indices here. But yeah, with the dollar coming up that strong, we have to find out if it actually makes a lot of sense here. But usually what we're seeing right now is pretty obvious, okay? The VIX coming down and the US 30 is coming up here. So again, this could be interesting to look at this stream, the indices right there. I think this is definitely something that we can take in consideration. We're looking at it just because of the volatility index. Volatility index has some room to go, especially coming back down towards some of these lows here. Especially what we're seeing right now, taking out the highs to then reverse, is usually not really a bullish signal for the volatility index, which can be ending up bullish for, you know, the indices here. In the short term, at least, okay? So the Nasdaq right now is looking to break internal highs. Let's see if we can break some internal highs right here. If we bounce from a zone, we actually did bounce from an area of demand right here, so that's important to mention, okay? We had that zone right there. Now we have this high that we have to take in consideration as well right there. That high is the most important high to put in the low. If you can break this high, we're going to potentially flip. All right, this is important to look at. So we're going to set an alert here. We're going to keep a close eye on the VIX. And the moment we get triggered on the VIX and on the Nasdaq here, and it makes sense, we're going to enter a long position right there in the short term. Okay. Alex says, Lorenzo, yesterday winner, post on your post 9 times. Okay. There we go. We'll check it out. Thank you. Thank you. Send me a message. I'll look at it after the stream. Okay. Okay, maybe that's why he was so in a rush. That could be the reason. Thank you for letting me know, brother. Okay, Nasdaq is open. All right, we have one alert set for the Nasdaq right now. That's number 1. Rafael says, I believe the Japanese yen basket might be turning bearish soon. I think this could be... yeah, this could be possible, especially if the dollar is indeed this strong right now at the moment. We are still holding here. We have still created higher highs and so on and so on. We have been coming up tremendously, but at some point, yeah, we are reaching now a major area of resistance. We are coming there right now. We are exactly at that particular zone. When looking at this area right here, pretty much right there, we are facing some serious resistance right now. So we have to take that in consideration. But I do not see clear, clear setup at the moment for the Japanese yen basket. I want to see an expansion, and then from there we will have more data. Okay. The Nasdaq though looks very clean. So who knows what will happen during the New York Stock Exchange open, or already before that, we might be able to get us in a trade right there. Okay, let's see what will happen with that right now. We shorted it yesterday. We might be scalping it to the upside today. Let's see what's going on here. For gold, also gold didn't really move that much. Yes, we came down. Okay. eventually from what we were talking about yesterday. We didn't took a gold trade yesterday. Once gold was still there, we were talking about it potentially coming down, dollar coming up. It did happen eventually, but no. Eventually, we did not really anticipate on a gold trade yesterday, just because I didn't see the right setup right now. However, we came back up again and we're getting rejected right now one more time. Same for gold. At this particular moment, I do not see a clear setup on that end at all. Okay, so the Nasdaq is looking good. Anything else we're looking for? Let me know in the chat. What are you guys looking for right now? And then based on that, we can move forward right here. Lorenzo, will you stream tomorrow for the NFP? Yeah, we will talk about this. So I think we might well do it, and then I will turn it later to crypto. So maybe we will have 2 streams tomorrow. We could have 2 streams tomorrow. Yeah, let's see. Any setups right here, guys? EHUB says buy EJ. We'll have a look at that one. Habib says EURUSD right now. Yeah, so with the EURUSD, like you have to understand, whenever you make such a massive banger here of an expansion, you have to be very, very careful. Of course, people at some point are gonna offload the short position, are gonna take some profits. So yes, you could potentially trade the bounce. We have done this many times before as well. When looking at the dollar especially, you could see the same thing right now at the moment. The dollar breaking lows. The euro coming of course back up and reacting towards the dollar here coming down. So there is definitely some potential, but I think we're not completely done yet at this particular moment. I really do believe so, that we are not there yet at the moment. So let's be a little bit more patient with the EURUSD. Because, you know, trying to catch the bottom for now, at this stage, is in my opinion, not the best move yet. From my personal experience right here. My man Voltaren in the building. I hope you're doing well, my friend. Thank you, man. Appreciate it. Wow. Okay, thank you, my man. Really, really appreciate that. So what we're going to do, guys, because of Voltaren right now, if we reach the, 500 likes right now, we're going to give away 50 bucks. If we then reach the 700 likes, because we're going to stream for a couple hours, so we probably reach this, then we're going to give away $100, okay? So the first giveaway is 50, second giveaway today is $100, all right? Thanks to Voltaren. Thank you so much, my man. Appreciate you. Much love. Someone is talking about the euro Japanese yen, correct? Okay, let's go over this one as well. So far, euro yen is still really very weak. The euro is still weak. Yen is not really that strong here. So my suggestion is to wait for some sort of pullback and to see when it comes back to this point of interest, to look for the continuation. I mean, if we have no other reason for example, the yen to, let's say just still stagnating or consolidating, then in my opinion, just wait for the pullback and look for the continuation and see if it's possible, if it makes sense here when looking at the others. The other particular chart is on the 5-minute time frame. Right here, it could be a 5-minute area of supply. You guys can see already there. That could be a point of interest you're looking for. Who knows? Wait for the rebound here, and let's see from there here. Okay. Euro Japanese yen. Somebody was talking about the euro trading dollar. A lot of euro pairs, a lot of expenses as well for the euro pair. So usually when you're looking to trade it now, you're kind of on the late side. Okay. Because of the following reason. I mean, the news came out, the massive expansion, like you're now in the middle of nowhere, all right? So where do you want to trade it from, all right? So please, look at all of these different setups. Same as the Euro Canadian dollar. I mean, people get triggered by expansions a lot, right? So they see a massive expansion and then they feel that they have to trade it. If you recognize this, please let me know in the chat because it's quite common, okay? It's quite a common thing right here. I had it also many times before when I started out trading. So Yeah, just when you see this, just be patient. Be patient and see what can happen after that, all right? We might be able to catch a trade in regards to the euro, but right now with an expansion like this, you can rather be patient to see if it could flip or pull back to then look for a setup. Because really, that expansion is not usually where you want to trade from, all right? Unless it's some sort of really short scalp where you look for a quick pullback, you know, when people are offloading their positions and stuff. I mean, it's a different layer. It's a different topic right here. Okay? Dollar dominates other pairs. Yes, 100%. Dollar dominates most of the other pairs. Or not other pairs, other currencies, I can better say. Okay, so keep a close eye on the Nasdaq for this session. We might be trading Nasdaq right here. What is your take on crypto versus Forex? You know, both completely different, yet so similar. Very unique relationship they have here. I'm a big fan of both. I love crypto. I'm actually like secretly a really big fan of it. But yeah, we're making still a lot of money in Forex as well, so. Okay, I'm gonna go through some charts right now and to see if we can find some of our setups that we're looking for currently. Yeah, we have the ECB coming live right now. I know that's true. Maybe we'll watch a little bit of it as well. Good point. They didn't decide to raise the interest rates here, so that's that, or they increased the interest rates. It's very interesting. If you look at what the dollar did, the euro did not do that. Usually they follow each other. Okay, they're like, you know, we're gonna do the day after Jerome Powell's speech, so I can say the same thing. You know. But interesting, yeah, we might be watching this. We might be tuning in a little bit indeed. But I want to get some setups set up to then just continue our journey. Maybe listen to the speech and then maybe see what we can do from there. Okay, New Zealand dollar got rejected here. Okay. All right. Yeah, we have an alert set on the Nasdaq, so if we get hit, we get hit. That's the most important high. Look at other shadows. The reason why we are now in somewhat a medium, in like mediatory range, is because of the news that came out here, of course, massively. Let's see what that link is about indeed. Let me know, Gigi, if you're still here. If you can send it to me, that would be amazing. Or did you already do it? Of course you did already. Much love, much love, much love. All right.
The economy grew by 0.
Okay. Let's see what we have here.
1% in the first quarter of 23, according to Eurostat preliminary flash estimate. Lower energy prices, the easing of supply bottlenecks, and fiscal policy support for firms and households have contributed to the resilience of the economy. And consumer
she's live.
Have recovered steadily in recent months, but remain.
Let's have a look at this real quick here. It's super important. It has to do with the
war against Ukraine and its people.
This has to do, of course, with the interest rate decision we saw today for the euro that didn't actually increase their interest rate. It's still at 3.75%. You saw that the dollar shoot up The euro came down very aggressively here. She's covering right now what the particular reason is, why that happened, and how this can happen or affect right now the euro, the dollar, and anything else as well, related, of course, to what we're going to do now, and that's trading. So we need to be aware of what she's saying, so we do not make any wrong decisions that we could have potentially prevented. All right, so have a look at this real quick. Not too long. If it's too long, we just, and nothing's happening, we just cut it and we just go back to the charts. Well, we do charts looking at the Nasdaq and look at or listen to Uncle Aunt Lagarde.
And its recovery has stalled since mid-2022. As the energy crisis fades, governments should roll back the related support measures promptly and in a concerted manner to avoid driving up medium-term inflationary pressures, which would call for a stronger monetary policy response. Fiscal call for a stronger monetary policy response. Fiscal policies should be oriented towards making our economy more productive and gradually bringing down high public debt. Policies to enhance the euro area's supply capacity, especially in the energy sector, can also help reduce price pressures in the medium term. In this regard, we welcome...
Oh, my bad, guys. My bad. I made a mistake here. They did raise with 25 basis points hike. I already was confused. Okay, they actually did here. All right. Thank you for sharing. So they did raise it. I was confused. I didn't see it. They went from 3.5 to 3.75% here. Thank you for sharing with me right now, my man. I appreciate that. Yeah, like I thought already. I was like, what? They're not following Jerome Powell here? That's very, very strange. Usually they do exactly the same thing here. So thank you for sharing that with me.
Minus 0.9% in March to plus 2.5% in April, the rate stands far below those recorded after the start of Russia's war against Ukraine. Food price inflation remains elevated. However, standing at 13.6% in April after 15.5% in March. Price pressures remain strong. Inflation, excluding energy and food, was 5.6%.
Euro is still falling,
having edged down slightly compared with March to return to its February level.
Significantly.
Non-energy industrial goods inflation fell to 6.2% in April. Energy industrial goods inflation fell to 6.2% in April, from 6.6% in March, when it declined for the first time in several months. But services inflation increased to 5.2% in April, from 5.1%
there's something not correct here. Let me give me 1 second here.
Inflation is still being pushed up by the gradual pass-through of past
there we go. It should be good now.
Cost increases and supply bottlenecks. In services especially, it is still being pushed higher also by pent-up demand from the reopening of the economy and by rising wages. The information available up to March suggests that indicators of underlying inflation remain high. Wage pressures have strengthened further as employees, in the context of a robust labour market, recoup some of the purchasing power they have lost as a result of high inflation. Moreover, in some sectors, firms have been able to increase their profit margins on the back of mismatches between supply and demand and the uncertainty created by high and volatile inflation. Although most measures of longer-term inflation expectations currently stand at around 2%, some indicators have edged up and warrant continued monitoring.
EU is absolutely getting crushed right now.
Let us now look at our risk assessment. Renewed financial market tensions,
look at that,
if persistent, would pose a downside risk to the outlook for growth, as they could tighten broader credit conditions more strongly than expected
back to the Sunday
and
open
dampen
here.
Confidence. Russia's war against Ukraine also continues to be a significant downside risk to the economy. However, The recent reversal of past adverse supply shocks, if sustained, could spur confidence and support higher growth than currently expected.
Keep a close eye on the Sunday open.
The continued resilience of the labour market, by bolstering household confidence and spending, could also lead to higher growth than anticipated. There are still significant upside risks to the inflation outlook. These include existing pipeline pressures that could send retail prices higher than expected in the near term. Moreover, Russia's war against Ukraine could again push up the costs of energy and food. A lasting rise in inflation expectations above our target, or higher than anticipated increases in wages or profit margins, could also drive inflation higher, including over the medium term. Recent negotiated wage agreements have added to the upside risks to inflation, especially if profit margins remain high. The downside risks include renewed financial market tensions, which could bring inflation down faster than projected, weaker demand, due, for example, to a more marked slowing of bank lending or a stronger transmission of monetary policy, would also lead to lower price pressures than currently anticipated.
I'm going to set an alert on Sunday open here. I want to see how we react when the dollar is there.
So let's look at the financial and monetary conditions. The euro area banking sector has proved resilient in the face of the financial market tensions that arose ahead of our last meeting. Our policy rate increases are being transmitted strongly to risk-free interest rates and to the financing conditions for firms, households and banks. For firms and households, loan growth has weakened owing to higher borrowing rates, tighter credit supply conditions and lower demand. Our latest bank lending survey reported a tightening of overall credit standards, which was stronger than banks had expected in the previous round, and suggests that lending may weaken further. Weak lending has meant that money growth has also continued to decline. Summing up, the inflation outlook continues to be too high for too long. In light of the ongoing high inflation pressures, the Governing Council today decided to raise the 3 key ECB interest rates by 25 basis points. Overall, the incoming information broadly supports the assessment of the medium-term inflation outlook that we formed at our previous meeting. Headline inflation
almost there.
has declined
Euro coming down still.
month, but underlying price pressures
Very weak at the
remain
moment.
strong. At the same time, our past rate increases are being transmitted forcefully to euro area financing and monetary conditions, while the lag and strength of transmission to the real economy remain uncertain. Our future decisions will ensure that the policy rates will be brought to levels sufficiently restrictive to achieve a timely return of inflation to our 2% medium-term target, and will be kept at those levels for as long as necessary. We will continue to follow a data-dependent approach to determining the appropriate level and duration of restriction. In particular, our policy rate decisions will continue to be based on our assessment of the inflation outlook in light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission. In any case, we stand ready to adjust all of our instruments within our mandate to ensure that inflation returns to our medium-term target and to preserve the smooth functioning of monetary policy transmission.
Coming very close, keep a close eye on the euro. This could be interesting when the dollar is there.
And the first question goes to Annette Weisbach from CNBC. Annette, please.
Thank you very much, President Lagarde. I have, of course, 2 questions. My first question would be on the rationale behind the reduced pace in the interest rate hike of 25 basis points. So why did you come up with that? And my second question goes to the US regional lender banking crisis, which isn't over yet. So how concerned are you about potential spillover effects to the euro area? Thank you.
Well, thank you for your question. I will take the first, and maybe I will ask my colleague and
Nasdaq
friend,
also. I have a lot of confidence in it later
today. The second one. So let me tell you a little bit about the mood in the room of the Governing Council. I would characterize the mood as determined. All governors are determined to fight inflation, tame inflation, and return it to 2%.
2%, guys.
And we all concluded, as you have seen, that the inflation outlook is too high and has been so for too long. I would say then that the mood was very focused, and yet it is an in-between projection Governing Council meeting. But we were extremely attentive to all data that was available to us. And obviously, one case in point is the bank lending survey that you all received or saw on Tuesday when it was published, and which contains a lot of intelligence and information about the intention and the comparison between the lending practices and standards with what was expected by the banks, and I'm happy to come back to that later. But it explains, obviously, the decision that we made we were method dependent in many ways, just as we are data dependent, because we have articulated the reaction function of our monetary policy decisions with the three key elements of the inflation outlook informed by the financial and economic data, the underlying inflation, and the strength.
I like the Nasdaq so far. I like what I see here.
So we checked all the data that we had against these three criteria.
Seeing the rejection there.
As is always the case at the Governing Council meeting, there was a variety of views expressed. And I think that it's fair to say that everybody agreed that increasing rate was necessary, that second, we are not pausing. That's very clear. Third, we know that we have more ground to cover on the basis of the baseline that we had, which is still guiding us until we have our next projection exercise, and on the basis of the data that we have received in the course of the last few days and that we brought together during the meeting. So I think the ultimate balancing act, which received almost unanimous support, and that is reflected in the monetary policy
dollar coming down. You see, there we go. We're seeing it high getting broken. Dollar coming down here.
Was really predicated on the methods. Third, informed by the bank lending survey and the data that we have concerning interest rates, which is a little bit outdated because it goes back to February. The transmission of our monetary policy is working, at least to the financing leg. And we're not yet certain about the next leg, which is transmission from banks to the real economy. So it's on the basis of all that that we made our decision. Now that we have, increased rates significantly and sometimes by very large increments, I hope assessing...
dollar coming down a little bit?
Not assessing, but establishing absolute credibility on our determination. It was sensible in view of what I have told you to return to a more standard increment with the understanding that based on the information we have today, we have more ground to cover.
Significant turnaround right now. Wow.
That's extremely clear.
Look at that.
Good afternoon. Turning to your second question, I think that we should start by a consideration. If you look at the characteristics of the US banks that are running into difficulties, I think that there are some common features. The first one is that they are medium-sized, regional. They share a very concrete and very idiosyncratic business model.
Wow, look at that.
And they are quite open to interest rate risks. They are vulnerable to an increase in yields. And I think that, this model, this situation is not extrapolatable to to the European banking industry. Well, I will not repeat what we have said many times. The European banks are resilient, the level of capital, the level of liquidity, the quality of the liquid assets. But I think that simultaneously we have to remember that an increase in interest rates, in yields, is positive for the European banks because the increase in margins outweighs the potential losses that this increase in yields could cause in fixed income portfolios. But I think that it's quite clear that there is no space for complacency.
Nasdaq is coming up.
One of the things that we have
I'm looking for potential buys and buffer.
Surprised is about how rapidly a bank run can take place and how rapidly a bank can be emptied. And I think that this is the combination of new factors. The first one is digital banking, and the second one is social networks. And the combination of both have given right to a
digital banking, social networks.
And I think that supervisors and regulators, we have to bear in mind that new framework, because we believe that this is going to be key in the near future.
Thank you, President, Vice President. The next question goes to Francesco Canepa of Reuters. Francesco, please.
Thank you, Francesco Canepa, Reuters. So my first question is about whether anyone at the meeting insisted on a larger rate hike or on a clearer commitment to more hikes. You just hinted at that by talking about ground to cover, but it wasn't quite as explicit as it was back in the winter when you were talking about steady pace and several rate hikes. Second question is about something you just said, which is, again, that you had more ground to cover. Would you say that we are still in the middle of the journey or towards the end in the home stretch?
Look at that. What a turnaround.
I'm tempted to remind you of the Emerson quote. It's not so much the destination that matters, but the journey. And we are on a journey. Okay? And we are not pausing. And under present circumstances and based on what we have, which is the baseline of March, we know that we have more ground to cover. Okay? And there is a clear reference to that if you look carefully, and I know you have because you do that very well. But in the second paragraph of the monetary policy statement, we explicitly refer to that by saying that our future decisions will ensure that the policy rates will be brought to levels sufficiently restrictive to achieve a timely return of inflation to our 2% medium-term target and will be kept at those levels for as long as necessary.
There we go. Yeah, this is, of course, pretty hard quiz right here.
A lot of ground in the last 9 months, right?
So you see strong recovery right now for the euro. Let's go to the euro index.
Plus 300 basis points.
Look at
we
that.
are continuing this hiking process. As I said, this is a journey. We have not arrived yet. As to, the exact amount of, by how much do we increase rates? As I said in my introduction, in the response to the first questions,
need to wait for higher high here.
Views. Some governors suggested that maybe 50 was appropriate. Others also believed that 25 was appropriate. I didn't hear anybody suggest that 0 would be appropriate. So that confirms to you that this is a hiking journey that we are on, and it will continue to be so. But at the end of the deliberations, and having had a chance to confront our views and to answer the questions and to really sort of put everything in perspective, there was a general, very strong consensus behind the decision that you have in front of you.
Thank you, Madame Lagarde. And the next question is for Jana Randor of Bloomberg News.
Let's see what kind of question this is.
Morning.
Good
afternoon.
Well, good afternoon.
Euro coming down again, getting rejected right now.
I would like to invite you to elaborate a little bit.
Still patient here with any trade set up for euro-related pairs here.
The IMF had a view the other day, seeing the terminal rate at 3.75%. A lot of economists do that as well. Would that be something, given the inflation outlook we have at the moment, that would be in the ballpark of sufficiently restrictive? The other question I have is that at the last meeting, you had a little bit of a debate about over-tightening and having to reverse course.
Crispy.
And I'm wondering whether that discussion continued this time, and whether you would actually be worried that such a scenario might be interpreted as a policy mistake. Thank you.
Well, thank you very much. I don't have a magic number of what constitutes, open quote, sufficiently restrictive, end of quote. I think that the honest answer is we will know what that is when we get there. And we are in the process of moving in that direction. I think what's important is to understand, what it means to have restrictive rates and to be in restrictive territory. And I think the best example is to see whether
Be patient still with the euro right now.
decisions that we make,
Can
the
literally
rate
go in either
increases that we
direction.
decide, are actually having an impact on the economic actors. And when we look at the bank lending survey in particular, or when we look at the interest rates and the pace at which it has increased.
Dr. Dollar, hope you're doing well, my man. Respect, you're crushing it.
Obviously the fact that interest rate decisions that we made and the interest rates level where we are having an effect. Is it a sufficient effect yet? We don't know, because we are not seeing the transmission at this point in time into this, what I call the second leg of the economy, which is the real activity, which then has an impact on prices and then reduces inflation. So full cycle we're not seeing yet. We're seeing inflation coming down, don't get me wrong, because headline is coming down as a result of energy prices having coming down significantly, as a result of the easing of bottlenecks. But we're not yet seeing the complete impact that we desire in order to arrive at the 2% medium term. That
she's definitely telling more or is less cryptographic than Jerome Powell is. She's straight. She's definitely more straightforward.
It is restrictive, no question about it. Is it sufficiently restrictive? Not yet.
Yet it's all the same, though.
Thank you, President Lagarde. And the next question goes to Martin Arnold of the Financial Times. Martin, please.
Thank you. Hello, President Lagarde. I have two questions for you. The first one is on the decision to accelerate the pace of shrinking the bond portfolio at the ECB. Does that mean, now that you're stopping all reinvestments in the APP, does that mean that you plan to reduce the APP to zero eventually? And the second question that I have is, was this decision part of a compromise deal to convince those arguing for a 50 basis point move to accept a 25 basis point move in return for accelerating the pace of shrinking your balance sheet? Thank you.
Well, thank you very much, Martin, for this sort of double question on the same issue of the APP. Well, I would say, number one, we made the decision, but the decision specifically says we expect. So we expect to let...
Here we go, coming back down again, all right? Do not get trapped right now.
As time goes by. And in answer to your question about do we go to zero, if we do, then it's going to take the next 15 years. So I don't think I'll be around for that. I know I won't, and I'm not sure that you will be around. But the ultimate perspective is that one, as we consider things today. We've decided to expect the effectiveness of that decision as of July, saving a little bit of optionalities just in case, simply because we have seen that the partial reinvestment that we decided back in, that has been effective since March, has actually run very smoothly and has been well absorbed by markets. So we don't see any point in not accelerating the move because there are valid reasons for that. Lower the amount of excess liquidity, complements our policy rate increases, reduce the side effect of a large balance sheet. All of that completely justifies the fact that the APP is let to run off gradually over the course of time, which will be an average.
Yes, look at this liquidity getting built right now for the Nasdaq. If you can break that high,
not reinvested.
VIX coming down, dollar potentially coming down.
To run the whole
we will get into a massive long position here.
15 years. given the maturities of what we have. I would just reserve one thing, because we discussed it during the Governing Council and it's not reflected in the monetary policy statement. As you know, we have adopted a tilting approach to our investment policy of the APP, and in particular for the corporate bonds, which are the prime targets of that tilting, in order to privilege those corporates that have a good environmental footprint, that have a transition plan, and that disclose all the appropriate information about their plans. Now, of course, if we go to full runoff, that tilting process is not going to be applicable, because there will be nothing to tilt it off. There will be no basis for that. So I think the jury is out as to how we can continue to deliver on our Paris Agreement compliant investment reinvestment program without the reinvestment phase, and how do we address that, which is something that we agreed we would take into account and consider to see how we respond to that. Was it a deal? No. No. I think there was a general view that was the right move, completely sensible, legitimate at this point in time, given the market absorption. I think some might have preferred to wait until the June meeting to announce it, given that it's effective as of the 1st of July. But, with the principle of predictability that we had agreed in the first place.
Just to clarify, at any given moment, you can suddenly reverse here, all right? During these speeches right now, it's the same as yesterday, the FOMC meeting. Any given moment you see that it can suddenly flip out of nowhere. So be very aware, be very careful. Nasdaq, though, is for sure a long for me if you break that level.
Bank lending are limits in credit tightening. How do you monitor these indicators? And second question, you said recently in relation to bank failures on the Credit Suisse case that you really need to measure what comes out of this financial event. So what are the indicators that you're looking at? Would you say that there is a banking crisis? What's your view of what's happening there in the banking system? Thank you.
Yeah, on the, we know of one and only one target, and this is our medium-term target, 2%. That's what is riveting our attention. But of course, the bank lending survey that we receive on a quarterly basis informs us about the tightening of credit to the economy, and it also informs us about what the banks assess will be or will not be the tightening. And it's quite a sophisticated survey, which is really for information, intelligence, anticipation of the credit tightening now and the credit tightening going forward.
Bitcoin dropping.
It's also illustrative of the demand, and that's an interesting point, because in the BLS, the demand from corporates is really, really down. So that's learning that we take, which indicates that our interest rate policies is beginning to have an impact. Because when asked, the corporates say, and we had a corporate survey that was conducted, they say it's the interest rates. It's not that we don't want to invest, but the interest rates are pretty high. And that leads me to the restrictive territory or not. Yes, we are in restrictive territory, because if that is the response of corporates, then it shows that this works. On Credit Suisse, I think I'll say a few words, and then I'll ask my colleague, Mr. De Guindos, to also address that. But number one, it was addressed very swiftly.
You're coming back down again? So it came down, came up, coming back down right now?
And it was very specific and probably a long-lasting issue that was lingering and had been lingering for a long time. So I certainly would not draw the conclusion that the merger between UBS and Credit Suisse to be decided is an indication that there is a financial crisis. Far from it. But we are learning. I think that we also learned the value of having rules and the ability we had to come out very quickly on the pecking order of creditors actually mattered a lot. And I think that we can also take a bit of learning from that. When creditors, investors know exactly who is going to bear the brunt of outstanding liabilities and a situation of insolvency, it just helps. And we did that. I'm glad we did.
Well, just to add that on the question about the indicators that we consider, that we look at, well, we have a range of indicators. For instance, equity prices, bank bond spreads, the evolution of deposits. And we have not seen, the kind of situations that happened in other jurisdictions. So we had, let's say, a sort of, increase of tensions after, the events in the US with Silicon Valley and with Credit Suisse. And afterwards, the situation has been quite calm.
There we go,
so
we're back.
We are continuously looking at those indicators, but, clearly, now, the conclusion is that the European...
Keep a close eye on this zone, though, for the dollar. This is the most supported zone right now, the 101.550.
Of the tension, included in this kind of indicators, and, the potential stress in financial markets.
Thank you, Vice President, President. And turning to our online participants now, I would like to give the floor to Francesco Nilfole of Milano Finanza. Francesco, please.
NASDAQ, in my opinion, any given moment, we can start seeing some movement.
Good afternoon. President Lagarde, can you explain a little bit more?
7 minutes, we have the New York Stock Exchange open as well, in combination right now with what we're doing here. Listening to the ECB Council press conference, waiting and see what the euro is doing, what the dollar is doing. It's going to get very, very interesting right now in the next 15, 20 minutes.
You reconcile your data dependency with the pledge of doing more in the future. It can be a little bit contradictory, like a forward guidance without a forward guidance. Maybe you can explain it a little bit more. Secondly, on core inflation, no doubt it is important to monitor core inflation, but the ECB's target, as you have said just now, is headline inflation at 2% in the medium term. So how do you explain such a great emphasis on core inflation, also considering that core inflation has not been a good leading indicator for headline inflation in the past? Thank you.
Thank you very much. Data dependency is not forward guidance. And I'll try to explain that for you for a second. I'm not giving you the forward guidance that come what may, or subject to, or until such time,
dollar is getting weaker.
Do this or that. That for me would be forward guidance. Okay? And we had it in the past, and it was very appropriate to have forward guidance as we were at the lower bound, and that was a tool that was very useful. What I'm telling you now is, given our baseline, the findings that we have, the data that we can analyze today, our judgment in the room is that we are not pausing. That applies to today. And based on what we see, we determine that we have more ground to cover. I'm not saying that in the abstract. I'm saying that with reference to the baseline of March, to what we are.
Just real quick, what I want to show you guys also is that she is 100% pro central bank digital currency, right? That means that they can control our money system. They can pretty much decide anything they want. They can decide, okay, you can only spend this amount of money on that. You can only spend this amount of money on that. And personally, I think that only this month you can spend around 10% of your income on food because you didn't behave that well. You just didn't behave that well. So be aware that she's completely pro central bank digital currency. She's 100% against cryptocurrencies, right? Which is a completely different digital currency as well. Just listen real quick to what she has to say here again. It's still quite interesting to just get more context in regards to who we are actually listening to.
No, the problem is they don't want to be controlled. They don't want to...
Let's do it again. There we go.
They don't want to be controlled. They don't want to...
Yeah, but you know what? Now we have in Europe this threshold above 1,000 euros, you cannot pay cash. If you do, you are on the grey market. You take your risk. You get caught, you are fined, or you go in jail. But you know, the digital euro is going to have a limited amount of control. There will be control. You're right. You're completely right. We are considering whether for very small amounts, you know, anything that is around 300, 400 euros, we could have a mechanism where there is zero control. But that could be dangerous.
Anything underneath 300 pounds. We could maybe have zero control policy. Okay.
Attacks on France back 10 years ago were entirely financed by those very small anonymous credit cards that you can recharge in total anonymity.
And then she's referring to, yeah, but like in 2017, there was a massive terroristic attack and they paid, you know, they funded their own terroristic attack with debit cards that, you know, blah, blah, blah. Yeah, that's not the reason why they want to control us in that sense, all right? So just have an understanding of who we were talking to, who we were listening to. So anything she says, you just have to take it with a grain of salt, but just, you know, try to listen what she actually means. Listen to the tonality. Same with Uncle Jerome. Same with Aunt Lagarde as well. Right, so let's continue real quick and let's see how the dollar is responding, because now we have the New York Stock Exchange open. And I think it's super important to see how we open up right now with also the speech happening at the same time here.
To food and the increase in prices. We have seen it go down, right? If you compare March and April numbers, so it is going down. But we have to be extremely attentive because there are multiple factors that apply to food prices, that apply to processed food prices. I think we have also flagged the fact that profit last year, in particular in 2022, have contributed to inflation. This year, 23, what we have seen of 23, we see more wage increases contributing to inflation.
1 minute.
We would hope that through a good social contract, these drivers of inflation do not activate each other in what I have called in other places a tit for tat. You know, I want more wages. I'm not going to give up on profits, and you are then at risk of something that is much more difficult and would lead us to have to take more active measures in monetary policy.
Why? One thing. So if you are so pro central bank digital currency, why do you truly care right now about the current stage of the euro? It's pretty logical to me. Like if you truly want the central bank digital currency, you want to introduce a new currency, then the old currency needs to collapse. Why? Because then everyone has a massive problem and you provide the solution. So just again,
I wish I could tell you, of course it will continue down. That is a fact. So hopefully it will channel to the ultimate consumer.
Thank you, Madame Lagarde. And the next question goes to Andres Stumpf of Expansion. Andres, please.
Good afternoon, Madame Lagarde.
Good afternoon.
Can the ECB continue hiking if the Fed stops? Is that a baseline scenario you're working on? And second question, do you have any estimates on how much tightening is the QT and the TLTRO maturity adding to the monetary policy stance? Can you perhaps phrase it in hiking or basis points of hikes?
So far we're coming down here during the open?
You know, I've heard
Let's see how we react. We have opened right now.
Finance dependency. I had not heard the Fed dependency. So the ECB is an independent central bank. You know, looks at what others do around the world, from New Zealand, which has been an interesting innovator in the field of monetary policy, all the way to the Fed and others. And it's obvious that the US
created a new lower law.
In whichever way it evolves, has spillover effect around the world, given its size, the depth of its financial markets. But you know, we have a target, we have a journey. We know as of today that we have more ground to cover, and whatever the decision of the Fed is in the next few weeks, months, we are going to be riveted to our objective, and we'll of course take into account.
Dollar is still stagnating. Euros back at entry, back at where we came from initially.
any spillovers will be taken into account, but we are not Fed dependent in that respect. As to the actual tightening impact that the APP runoff has, I don't want to commit a number, but it does not have a massive impact, suffice to say. But we can give you, separately the exact amount that has been calculated, but it's not material.
Thank you. And the next question goes to Anna Karismo of the Finnish television Yle.
Okay.
Hello, and thank you for the opportunity, and nice to see you again.
Real quick, very important right now. The New York Stock Exchange just opened up. We're seeing it coming down, but at the same time, the volatility index is coming down. Apparently, gold is coming down, and the dollar right now is also a little bit coming down. All right, so there are a lot of things that are not aligning at the moment here. A lot of things that are not synchronized with each other, or especially pairs that are usually correlated are now not correlated, and so on and so on. So this is a moment of time where you have to be patient. You have to be patient. You have to wait 10, 15 minutes to see if you can get back into that regular stable price action right now. But of course, we have the New York Stock Exchange open. We had the FOMC yesterday. Tomorrow we have the NFP. And right now we're in the middle of the ECB press conference here. So again, I have my eyes still on the NASDAQ if you do flip here. All right, this could be a fake out to the downside. Let's see how it goes within the next 15 minutes here.
Finland to Portugal, from some of the Baltic countries to Spain, it is the case that some families are hurting because the reimbursements that they have to honor have gone up as a result of the interest rate increases that we had to decide. This is unfortunately not something that we can alleviate or attenuate, because our task is price stability. Our task is to reduce inflation. And the tools of choice that works in that respect is the interest rate.
I want to hear more about right now about the US debt limit, if they're going to talk about this as well, or how this will affect potential new future bank collapses in Europe, or whatever it is right here.
The best we can do
I would like to see some questions related to that right now. That's what I'm waiting for.
In a timely manner, meaning as fast as we can, and facilitate a return to different interest rates that would not be as high in the future. And I'm not here making any commitment to cut at any point in time. Thank you very much.
Thank you, President Lagarde.
Dollar coming down, euro coming up a little bit. So far, holding in this area of the month here.
Newswire here in the middle.
Thank you. You will travel next week to Japan for G7 meeting. What kind of topics do you want to bring at
NASDAQ back up right now, all right? NASDAQ is coming back up.
Thank you for giving us that angle from the east.
VIX is coming down. This is what I mean.
I would hope that together with my European colleagues, we can learn from colleagues, particularly Japan, which has just now. Which is moving into a new direction with a new governor. So anything that will be
gold is still above that zone.
Monetary policy going forward.
Nothing special
here.
The
understanding that we have of their strategy review, which he has announced, will be of interest. And I would be very happy to share with him the learnings from our strategy review, which I had started when I took the job. I would also hope that we can explain to colleagues from Canada, Japan, and the United States that the Europeans together are going to continue to demonstrate resilience, capacity to operate together. And I would hope that in that respect, something that we say in the statement here will resonate, which is to agree on the fiscal governance in short order, so that in addition to having a monetary policy that is common to 20 countries, we also have a fiscal framework which gives governance to the 27 member states, and that fiscal policies that are determined by member states are also focused on value for money, for lack of a better word. In other words, putting in place the right reforms, focusing the spending where it is going to increase the the competitiveness and the efficiency of the economy, which is something that is absolutely indispensable in order to have this social contract, which is often associated with Europe. Thank you.
Let's see if the dollar can break this low.
The next question goes to Isabella Bufacchi of Il Sole.
At 101.300.
Isabella, please.
Nasdaq trying to push back up here.
Good afternoon, and thank you for the opportunity. If I may go back to quantitative tightening, just to understand whether there is more ground to cover on QT, or whether with this end of reinvestments on APP, this is the end of QT. There could be more to be done with PEP, for example, starting on pandemic, or selling bonds to make it even quicker. So this also helps to understand how important is QT as a restrictive tool monetary policy. And my second question, if I may, is on TLTROs, because even if the European banking system is solid and resilient, and the banking crisis from the US
there we go. Good question.
Over, we hope. Still, TLTROs are going to end in an odd moment. And are you concerned, or are you confident the banks can give back 500 billion in June and get away with it? 407 about, yeah. Thank you.
Thank you very much. On QT, let me
this looks
be
way
very
cleaner.
clear.
This looks beautiful.
QT
However, we are coming down.
The decision that we expect to implement as of the 1st of July concerns
Nasdaq is looking way better, way stronger.
Only and nothing else. We have forward guidance on PEP reimbursement, nothing until 24, and you will find, I think, in the annex to my statement, reference to the PEP and to the principle of flexibility, which we believe is an important key aspect of PEP going forward. So those tools are intact. We're not planning on not reinvesting anything that comes for redemption under the PEP agreement. On TLTRO. Well, TLTRO, there is no surprise about TLTRO. If anything, we have managed to offer the possibility for banks to accelerate and anticipate the reimbursement, which I think has avoided a cliff effect that we would have had over $1 trillion would have become outstanding in June. Thanks to the accelerated reimbursement, we're now down to 477. I'm checking the numbers because I want to be clear on that. So it's not a surprise. It's a come due date, and reimbursements are due. And I know that banks have prepared for it, and that there is a lot of liquidity out there to continue to prepare. Having said
You're
that,
coming down again. Not worth to trade right now. The USD.
If some of the facilities that we have that are standing facilities, liquidity windows that are available, full allotment and rates that are well known to all.
Well, the index is coming up significantly. Nasdaq is still holding.
But would be used again, because that's perfectly normal job of a central bank to actually provide liquidity. We have weekly, we have the LTRO, 3 months, full allotment on all those liquidity facilities. And if anything was to happen, we have demonstrated in the past that we can be inventive. Thank you.
We're almost done.
Thank you very much. This concludes our press conference today. So I wish you all the best. We have the next press conference on 15th of June. And until then, all the best and a good afternoon. Thank you.
Okay. There we go. Last video I wanted to share to you guys real quick also is about the central bank digital currencies. Just very important that you're aware of what we're talking about here. She's pro central bank digital currency, okay? I don't want to go too deep talking about what it is and how it works and what it in essence can do with your freedom. But you can do your own research and find more information there. But let's listen to it real quick.
You know my views on CBDCs, and you know that I have pushed that project. Fabio Panetta is working hard on that together with members in the entire Eurosystem, with a high-level task force that is working really hard on moving forward. But in a way, I'm really pleased that attention is now focused on the role that cryptos can play and the role that central bank digital currency can have when they are implemented. We have a schedule, as you know. The Governing Council decided back in October 21 to launch a 2-year investigation phase. And it is at the end of that investigation phase that the decision will definitely be made to launch the CBDC and to make it a reality. We can't go wrong with that project.
We can't go wrong with that project, all right? It's almost certain it's going to come. The question is not if, the question is when. So what does saving the euro matter right now? Actually, if you think about it. Just think about that for a second.
I'm confident that we will move ahead, but that's going to be a decision of the Governing Council. I think it's an imperative to respond to what the Europeans expect, and I think we have to be a little bit ahead of the curve if we can on that front. So if we can accelerate the work, I hope we can accelerate the work. I will certainly support that. And I was delighted to see that
if we can accelerate the work, I hope we can accelerate the work. So the sooner the better.
United States, there was an executive order by President Biden to actually expect similar effort and focus and progress on CBDCs, cryptos. And I think that it will take all the goodwill of those who want to support sovereignty, who want to make sure that monetary policy can be transmitted properly using our currency will endeavor. On the issue of financial stability, I totally concur with my Vice President, De Guindos, but I will also...
Okay, just a little heads up, guys. Let's get back into the charts. Let's start looking right now. The VIX has been moving up significantly right here. The dollar right now, after the press conference, is finally moving. There is more volume. People are more ready to trade right now. It seems that the euro is coming back down again here. Let's put on our music again. There we go, there we go, there we go. Yes, sir. Central banks. This is the currencies. All right, be aware. That will be the end of Forex. All right. That will definitely mean the end of Forex. Why? Because it's programmed. Okay, dollar, we're going to come back to the Sunday open, and this is where I want to look at, okay? Are we going to get first rejected here, or are we going to test the Sunday open? We are going to face a lot of resistance right there, right? So the fact that the euro right now is coming down is interesting, but it's not there yet, okay? We still have this zone. We still created a significant higher high internally, okay? We took out this high right there, and now we're coming back to that low that put in that high. So this is what you guys can see right now at the moment, that we're almost back at that range while the dollar is stepping into this zone here. So we are at a very interesting spot for the euro right now. Very, very interesting. So keep a close eye on it. The Sunday open is coming closer and closer, and there is just a lot of resistance around the Sunday open here. So yeah, expect some bounce or expect some volume coming in from this particular area of the month. I'm not fully committed yet, or fully sure yet, that we're going to come down right now. Then we had the Nasdaq. The Nasdaq is coming down right now, of course, because of the fact that the volatility index shoot up after the New York Stock Exchange open, and now we really have that confirmation that this is what they want for today's session here with the New York Stock Exchange open right now, bringing the indices back down here, okay? So do take that in consideration. Of course, the dollar is also coming up a little bit, so maybe that's helping a little bit right now. But at the beginning, when we looked at the open, you saw that the volatility index was coming down while already, you know, the other ones or the US30 and stuff were also coming down. So I was more, okay, this could be a fake out. Right of now, we're seeing just a massive expansion here coming down. We did not broke that initial high that we were looking for. Okay, So it's just time to reset the charts here. Keep a close eye on the euro right now. I think this is definitely getting more and more interesting. At the same time, yeah, we are still not there yet. I mean, along from this area, you know, it is a nice area of demand. Cannot deny that. But what we need to see on the dollar right now, and this is more on the dollar side, yeah, we really make sure that we tap into that zone and get rejected from here. Break structure and continue its journey to the downside as well. Otherwise, yeah, we might be a little bit too early with entering a position here. Okay. Learn to earn, says your stream lagging. Let me know if that's the case. Just want to make sure. Other people have the same issue. Let's talk about the yen real quick. The yen has broken out of that level right now. That's major for the yen. Hey Lorenzo, I always see you go on different time frames. Isn't that wrong a little bit? I do not understand your question. What's wrong with what different time frames? Let me know. So yes, the yen indeed came down and now shoot up from that level. We now broke out of a range right here. This is where it gets very important, because now we can confirm that we have this particular range and that we can leverage that range potentially here. And I think this is a fantastic thing to look at right now. It's okay, what can happen when we retrace from that range? Because that's the moment we will find, you know, the other particular pairs, you know, like the Euro Japanese yen, GJ, and how we can actually execute a trade right here. Did you just say that Forex is gonna end? Yeah, for sure. Eventually it will end when the central bank digital currencies are released. Like one time it's hour, sometimes 2 minutes. Like, isn't it a little bit left and right? No, not left and right for me. I mean, maybe it sounds confusing, but not really. You know, there are many, like, I will make a video about time frames for sure. I will definitely do so. And the reason why, because I got a lot of questions about it. And I hop from time frames, but time frames for me are semi-irrelevant. Of course, I need to understand what, you know, macro time frames are, what medium time frames are, what micro time frames are, and I, of course, differentiate them. But when it comes down to actually executing, analyzing, I tend to look more at candle structures than the time frame itself. So for me, that's a way better way to look at the market, is to look at candles, because candles and market structure give me a way better confirmation than you know, sticking on a fixed time frame, or, you know, only using the 4 hour, 1 hour and 15 minutes, for example, whatever it is, right? Now I try to use every single time frame possible, from the 1 minute to the 4 minute to the 9 minute to the 15 minute. For me, it works very well. And I apply maybe everything based more on, of course, supply and demand. I think supply and demand is a big factor why I pretty much use it this way here. Somebody was laughing at me before also, you know, in the community and stuff. Is like, why are you looking at the whatever, the 4 minute time frame? Because I can. Why wouldn't I? Why wouldn't I? Who decides the rules here? Who says that you have to look at the 5 minute only, or at the 10 minute or the 15 minute? Just because TradingView shows you these like basic time frames here, does that mean that these are the time frames, only time frames that we have to look at? I think that Now, you should use the creativity, you should use an experience with a lot of different time frames if you understand how to use them accordingly. But it's a very good point. I will make a video about it. I think you made a very good point there, my man. I think that's definitely something that we need to do here. Okay, let's look at all the indices right now at the moment. So I think that's the best way to look for a setup right here. Claudia says your screen is not clear. For me, it's really good. Let me know. Let me know. I think some people have issues. I don't know what it is. I don't know what's going on. Okay. The best way to look at it right now is, first of all, we have a giveaway almost. 70 likes, we have our first giveaway. It's gonna be amazing. Okay. Right now, the most important thing to look at, in my opinion, right now is the dollar. Of course, we know that the dollar is relatively, you know, at a pretty much an area of resistance right now. You see that the dollar is at the Sunday open. The Sunday open is where the market opened, due to the fact that we, you know, started right there. We opened the market, we came up. Then on a Wednesday, we broke it. And now it's time to potentially pull back to the Sunday open here. This is then where the major confluence is actually happening. So as long as we are trading under the Sunday open, I assume that we can still look for potential longs for euro, you know, US dollar potentially, but only if that's the case. And that's why right now we are at a super important area and level, because I think this is definitely a place where we need to look for setups, you know, dollar related setups from, because it's going to be very tough to break this again. Okay. And that's why I think if we break it and we close above it, like let's say a 1 or 4 hour candle, and then, okay, we might have broken that particular level. But until that moment, we saw already twice a strong rejection here. Actually, perfect rejection from that level right there already. So that's why, as long as we're trading below it, I'm more tempted to look for longs on the EUR/USD and just trying to look for the right setups right here. All-timers, are we ever going to do a swing trade with you? Yes, sir, 100%. Please look at the Nasdaq. It took the lows, now back to the upside. So this is what I was looking for. I was waiting for the Nasdaq to make a move like that. Wow, the US30 is definitely not what we were looking for. We were looking at the Nasdaq. Now we came down pretty significantly. We have to zoom out a little bit here. The only thing that we are looking at is a structural break. Okay. The only thing we're looking at here. And yeah, right now we came back into that zone. So we came back into our 15-minute zone right here. We tapped into that area right now. Coming back, tapping into that range. And this is a good first sign here. So now let's go to lower time frame. What was the last high that put in the low? That was this high right here. 13,032. Then we have, in my opinion, a lot of room to grow here. Okay. A lot of instability as well, unstable price action there that we might need to cover. So I'm looking for more bullish momentum still for the Nasdaq here. Even though it's coming down, I'm looking for some more bullish momentum, and the only way to confirm that is by putting it in a new high, and especially breaking a high that put in a new low. Okay, because this high brought in this low, took out this low, pretty much right here. So this high, it took out this low, put in a new low. If this low now breaks this high, while we're coming down overall, we might be looking for the reversal. We might be executing a trade from there the same way as we have seen it many, many times before on stream. Okay. Alite says your stream is basically circles saying a whole bunch of nothing. I think you're new. I think you have never traded with us before. Welcome though, welcome. Bro, what's the best idea to determine or identify fake out versus pullback besides to wait candle close? Try to catch several times the impulsive trade, but it end up worse. Closures. So you want to look for closures after a particular break. So let's say we were talking about this right now. Let's say we break this high and we're looking for setups right here. Okay. The only thing that I'm looking for is a closure. I'm looking for a closure and not a wick. If we wick in and we wick out, we could see that as potential liquidity swipe here, and to then just move further down. Right. So what can reduce the risk for that to happen? Well, a candle closure at least. Understanding what time frame you break a particular high to then wait for that closure to then actually execute right there. Just to clarify as well with trading, guys, I see that this is a great example. What's his name? Ali T something. Understand that we're in the craziest week ever, right? We have the FOMC with the ADP. We now have the ECB press conference. We tomorrow have the NFP. Okay? Understand that when there is so much unstable price action, that I'm looking for the best possible trades setups possible, all right, for you guys. I'm trying to look for the best possible setups only because I feel that responsibility. Of course, we do not always win. We had 128 wins. We had 40 or 46 of them were losses, okay? Of around total of like what, 200 trades or something like that. We ended up with roughly a 70% win rate. And the reason why is because we are patient when we need to be patient. And we are not patient when we do not need to be patient. Okay? Now we're in a market condition where we need to be patient. It's very, very simple. So if you don't like it, it is what it is. It is what it is. Okay. Gold tapped into that zone. Now is looking for new highs. We have a bunch of liquidity built up here. If the dollar decides to break particular lows right now, we might be able to look for a continuation. So far, the EURUSD is doing what it's doing here. Okay. Let's see what we have. We have the euro right there. We tapped into that zone. Fantastic. We're now looking for a new high. Which high put in the last low? Again, it's the same story. Why? Because if you look at it from this perspective, you see already here that when looking at the euro right now, that we want to break a particular level here. You see that the dollar is coming down. We are building some serious liquidity right now to the downside. So at some point, in my opinion, it will be, I'm pretty certain that we will come down here towards these lows and test like the 101.150. But then in regards to the euro right now, I mean, it's a nice zone. The only thing that we look at is this particular high. Okay, the 110.440. Let's say we break this one, we close above it, and the dollar comes down, we close below. We might be able for a trade for the EURUSD right here. Cowboy says, don't worry, Forex in the traditional markets will be around for a long time. Yes, and I'm a big fan of cryptocurrencies as well, right? So we're always will trading something, my friend. Regardless. Trading will never end, exactly. Trading will never end, I assume. We will trading underground markets if we have to. So waiting for a higher high here for the euro. That could be very, very beneficial. Okay. I think this will give enough time for us to come down with the dollar here. So In my opinion, waiting for a higher high is good because then we bounce from a zone. We already, if you zoom out here, we already bounced from another area of the month right here of this range, which is in discounted territory. Okay, we came back down. We crushed first at the 50%. We stacked there for a while. Then we came down to the 62, and now we're coming back up. So let's see how we evolve here. The most important reason why we wait for a higher high is because you want to wait for a confirmation that we're actually potentially reversing here. Okay. Otherwise, we can better not enter the trade yet at this particular moment. Truth will come is like what underground markets, crypto, you know, intergalactic commodities, for example. Who knows what's happening in the future? We will always be doing something here, guys. Okay, the only thing that's moving a little bit here, the rest there is literally no volume, like zero for the euro, for the dollar. The yen is doing something. Okay, the yen is making some moves right now. All right, let's do the giveaway very soon here. We're almost at 500 likes. Time for the giveaway. Because of Voltaren, we will have something very, very nice here, very, very soon here. I'll probably do an extra $50 on top of that. Has the dollar flipped bullish? Yes, but I'm not really confident yet that we are going to go up here. Due to the Sunday open right now. Building a bunch of liquidity below. I'm not convinced yet here. We're starting to build some serious liquidity right now here as well. If we can create a lower low, the better it will be. The reason why is if we can create a lower low right now and we then make a move to the upside, now we can move this to this high right here and we can long from there. Okay, the volume has to be there though. So that's quite important to look at, to take into consideration here. So yes, I am looking at the euro here. I think we have been coming down very significant. I think because the volume is decreasing here, that we are now showing us a little bit more potential. Okay. We're building this liquidity right now. We're looking for that low. What we want to see is we just want to break a particular low that initially put in that high as well. A little bit further down to then reverse up from there. Overall, I do like it a lot. I think this is super clean. We're starting to build out a lot of liquidity here on both sides right there. The fact that the dollar is now in that resistance can be a good combination, okay? So I'm waiting for that moment when we can bounce from it one more time, maybe create an internal lower low, so then this becomes the high and we long from there. It's very, very simple. So I'm going to keep it open right now. We got lucky with our Euro USD long trade. We had 2 trades today. We entered at 110.676. Right there. We exited at, I believe it was, oh no, we exited there. Okay, I was thinking, okay, wow. We entered a little bit earlier, and then it reversed. We discussed the future of the V2 community this morning. Thomas says it's all planned, buy an island. Nice. Yes, the V2 is officially closed, guys. Nobody can enter any longer. Alright, we're finished. We're done. For all you guys that are in the V2 right now, congratulations. I'm very happy to have you here. You know, it's going to be amazing. You're going to make something very, very nice. More information about the V3 will follow. And that will come also a little bit later. Probably, you know, at the end of next week somewhere. There we go. What we have as well. Let me know if you guys are ready for the giveaway. Oh, we're almost there. We're almost there. We're coming very, very close here. Let's see if we have a new video on. I think we have. Yes, sir. We have a new video. Okay. The giveaway is going to start soon. Once it's 500 likes, we're going to do it straight away. If you want to join the giveaway, you can place a like and a comment on this video right there. Okay.
I don't care about pips, I care about risk to reward. If I risk, let's say $1,000, which I'm gonna do now, I wanna make at least $1,000.
What's wrong with my voice?
The Euro Australian dollar is actually coming down right now. Look at that, guys. Doesn't look strong at all. It went straight away. It felt straight away. I'm not playing around right now. I'm gonna put my stop loss break even quite quickly. This is a major move to the downside here. Ooh, falling now. Falling now. That's the strategy I'm looking for, right? Let me know in the chat right now who's in the euro against the Australian dollar. Let me know in the chat. It's time to take some more profits. I'm gonna keep 20% open, and that's it.
Yes, sir. I think you guys remember this trade here. At least the people that are watching on a daily basis definitely remember this setup that we had. It was a beautiful, beautiful trade when there was beautiful price action. And the market was very, very nice as well. You know, a couple weeks ago. Very, very good. Place a comment, place a like under that video. Okay. And I don't know what happened to my voice. The Euro Australian dollar, guys. Euro is coming down. Anyways, you know what we do. Then at 500 likes, we're going to do it. So we need 30 more likes as well. We're going to give away $50. And if you can get the 700 likes today, we're going to give away $100 on top of that. Or you guys can decide 75-75. It's up to you guys. You guys can decide. That's exactly how we sound. Okay. All good then. Amir says, I was there when you traded that. Trade FX is why I'm not in the comments. I have no idea. Okay, dollar is coming up. Where is the dollar going towards? Let's see what the dollar is doing. Let's see where the dollar is at here. Okay, we're coming up. Beautiful. Let's see how we react here around the Sunday open right there. Rafael says US dollar Japanese yen looks good for potential long. Okay, I'm interested in it, especially if we break the Sunday open. So I will definitely have a look at it. Let's see what we can do. Keep in mind, I'll still look at the EUR/USD. If we create a new lower low, it's only for the better. That means that we can then move our potential entry here if we still get rejected. So right now, we have created a lower low. Okay. So for me, it's only better to look for a new higher high. Why? We have clean liquidity built up here right now, guys. Take that in consideration. Every single time we touch this, at some point we're going to break it. We're going to take out the liquidity very quickly that is built up below here. That is only will happen when the dollar potentially comes to the Sunday open and gets rejected from it. That's why we are constantly waiting here, seeing what the dollar will do, potentially bouncing from the Sunday open and coming down. If we're seeing that actual rejection right here. If you do break it, we might see indeed something nice coming for the US dollar against the Japanese yen here. So I'll trust your words, my man. Let's have a look at it. Yeah, I do like what you're seeing here. Of course, we know that we had a beautiful expansion. We came into that zone, number one. Maybe on the lower time frame there is a little bit more of a gap. I do think that we can come down maybe slightly. But hey, it will only be if the dollar indeed decides to break. In my opinion, what I'm personally looking for is then the same particular concept, and that is breaking this high to put in that last low. Okay, breaking this high. And then look for a particular setup here and then target, of course, the highs that were all the way built up here. This is actually fantastic if you look at it from this perspective right now. You know, you just pretty much draw a simple trend line. You know, you can already see that we are bouncing from this range. We came up, we came back down again. So you need to break that high to really confirm that it's not a fake move here. Click on the link below, not working. Okay, it's Lorenzo Corrado FX. Sorry for that if it's not working. Lorenzo Corrado FX. Then that ECB was boring, I always fall asleep. That's the point. Most people are bored to listen to people controlling their life and finances on purpose. I don't know, man. You got a good point there, though. It is indeed very, very boring. And this is pretty much a week where you have to accept that the market can be reacting also very, very, aggressive or very unstable price action, unstable volume. You know, this happens once a month. And the thing is about Forex. Forex definitely changed over the last couple of months a lot, in my opinion. Out of my personal experience as well, because we are so much more focused on news events right now than before. Every single FOMC meeting matters so much more than before, of course, because of the situation, because of the inflation and all of that stuff. So, part of the game. Part of the game. We're working from news event to news event to news event right now. And in the meantime, we're trying to trade and find our best setups. That's what I'm saying already beforehand. The best possible trading days are probably around 5 out of 20 days a month, roughly. These are like days where you really can nail it down and where you can really make a lot of money. The other days where we go live and stuff, where we catch a trade now and then, that's perfect. But there were also times where we had, on stream, we had 8, 9 trades, 9 winning trades in a row. It was crazy. Trade after trade after trade like that, playing out. Beautiful price action. Lorenzo, I'm aware this is not a crypto stream. Could you do an analysis with me on Ripple? At the end of the stream, if you don't mind, brother. Okay, right now, dollar. There we go. Dollar is in that zone. Okay. We have that liquidity built up here. This is not looking clean. This can definitely be taken out here, guys. All right. If this comes down, euro will go up. Euro will push. We have put in a new low, so that's good to see. What factors determine a good trading day for you? Well, volume. Consistent volume. That's the most important factor for me personally. Mikola says there's a good chance that tomorrow's non-farm payroll report will be positive for the dollar, so we should be breaking the Sunday open. I definitely do believe that tomorrow will be the biggest day. Tomorrow is the biggest day regards to the volume in the market during that event. Okay, I think do not expect too much from the London session. I think that after the NFP, we're gonna see a very strong closure for Friday, and I think that that's gonna be a good day for us potentially here. Anyways, from next week onwards, back to normal. Okay, next week. We have a bank holiday on a Monday. All right. Not for the United States, I believe. No, not for the United States. Oh, sorry, next week. Only for the United Kingdom, we have a bank holiday here. We have the CPI Wednesday, important. Obviously, the PPI, important as well. But that's pretty much it. Okay. CPI is important though, very, very important. But for the rest, it's all about the British pound. So less news after that. I think we can trade a lot of other pairs here, like the Japanese yen, indices, and so on and so on. I think this is going to be completely fine here. The next week should be a better week for sure. Let me know how this week was for you guys. We made around $20,000 this week on the Nasdaq. And GJ and the EURUSD. A little bit on gold. And we lost on the EURJPY. How is it for you guys? Let me know in the chat. How's it going?
Glacier says gold saved me this week. Joy says negative. I love Greece says minus 20 euro. Baxter says I made 20,001. Jacob says blew my account yesterday. Alzus is up 13.5%. My Wenda account was down this week, so I didn't trade. David says I went broke this week looking for a job now. Carby says good week for me. Damon says I'm up 3%. Congrats, Damon. Jonathan, I'm up 10% in 4 days. Congrats. Nick says amazing, bro. Up 9%. Wow. Amazing. Many of you guys are up. Many of you guys are up. Some of you guys are down, which is completely fine. Just keep moving forward. Apply the right. Okay, let's say, for example, you are at a $20,000 account and you filled this account twice, all right? My suggestion is always to just go back lower and lower and lower and to start build up here, okay? It's truly the long-term perception that you need to have, the long-term interest in scale building here. So let's say you make a lot of money and so on and so on. Why starting straight away with $100,000? I know it's fancy, but in my opinion, what the best way to do it is, like how I did it, I started out with lower amounts of money. I didn't use any funded accounts. I had my own network and so on and so on. But you start out with lower than, whatever you can afford. Why? Because then you can start out, you can convert that, you can compound, and before you know it, you have what you really need, and that is whatever $300,000 account, right? Just something that you can take consideration. You could literally, if you are a really good trader, and you could say, okay, I'm a good trader. I know I can do this. I can make it happen. And you have to pay $1,400 for a $300,000 account here. All right? Why paying that? Because if you're a really good trader, why just don't you, start out with a lower account first, get that money, pay for that account. Before you know it, you scale it up from there. Okay? Could be interesting. Something to think about. Okay, we're starting to make some serious moves here. First high is taken out. This is the high we're talking about here. And the dollar is indeed coming down, guys. Look what the dollar is doing. The dollar is taking out the lows right now. Dollar is indeed coming down here. It broke at that particular level right now. We put in a new lower low. Is that the case? Yes, sir. And we're seeing the alignment here. We came back to the Sunday open again. It was just a lot of resistance right here, right now. So we are again in that range. I think we're going to test these lower lows here, which is going to push the euro up. This is what I do expect at the moment. So we're here. Let's put up the euro USD. 3-minute chart. Let's see what we have. Okay, we have this one right here. Let me put the dollar on the other side. We broke below. I think it's time. This is what we were waiting for. Let's go to the USD here. There we go. Okay, making moves here. We were waiting for this moment.
Broke the trend as well here. We have a lot of fantastic trends right now created. Okay, this is what we are trying to look for. We're looking for potential longs. This is why we can go for that imbalance here. Yes, the dollar has been moving, but I think it's time for the dollar to come down here. So this is what I'm looking for, guys. Right now, we are coming closer and closer to what we were talking about. Okay. Dollar indeed coming down. What do you want to see right now? We're almost at a 30-minute candle closure, okay? 30-minute candle closure right there. This is what we were waiting for. There we go. 30-minute candle closure. Almost there. If we can close this candle like this is absolutely fantastic. Will be great. Looking good here. We want to see a closure above that level right there. We are right now making some really solid moves here for the EUR/USD. So let's see if we can wait for a closure. If that happens above, it would be amazing if we can close a 30-minute candle above this level. Of course, the dollar right now is in that area of the month. Okay, we are coming in that area of the month right now. But I do see that imbalance underneath. So there's definitely some potential here. We have built up that clean liquidity right here. News for the dollar. Let's see what else we had. Was it crude oil? No. I think it was not that important though. Let me see what we have. No. If you look on the 10 minutes, 15 minutes, we already got a nice area of... we tapped into the breaker. Okay, super important breaker block right here. This can hold definitely very strong. All right, so this is... I like this a lot. I like things a lot. I think things are aligning very well here. So potential trade setup coming right now. Very, very soon. Okay. Breaking coming up almost. We have close to 30-minute candle right now. We now can come back up here. I want to see at least at the moment a nice 1 minute candle closure. I think it's enough for me personally to look for a position here. Why? We just closed a 30-minute candle closure, or we just had a 30-minute candle closure right there. We had this last zone. This can act as an area of demand here. If you look internally, that particular zone, we have this level right here. What I want to see it closing at least above, placing in limit order, stop loss underneath that last low. And that's it for me personally right now. Trading with a bigger account as well, live. Usually I only have like $100,000 on a TradingView account for you guys to trade with. Right now I moved into a little bit of a bigger account here. You see this? You see the dollar still coming down. That imbalance is still underneath. I do like it. I think you definitely see the potential here right now of the EUR/USD coming up here. Also bouncing from a nice breaker. 30-minute candle closure was good. And now we were going to see it potentially coming up here. I personally have placed a limit order. But yeah. I think that I'm going to wait personally for the retest. Sometimes it goes straight away. But this is how my strategy is built up. It's up to you guys here. I tend to wait for a particular move here. Finally seeing at least some action here. In a way I like it. Okay. Keep in mind, everything is a lot more riskier during times like these. In general, alright, during this week. But we have made already a really, really good amount of money here. But all the confluences are there. So yeah. Hopefully this falls within our 70%. Okay, give me 1 second, guys. Be right back. All right, coming down so far. We are in though. I'm not going to change anything here on this setup. I'm going to leave it. You have an arrow of the month still underneath. Gold is ready for the big reversal. We'll have a look at gold. And we had that bounce here from the 15-minute. Gold is right now facing a little bit of resistance though. But would love to see gold indeed breaking that high indeed. EUR/USD is not looking good in 5 minutes. Not looking bad at all.
Más feliz contigo que de Liverpool con Lucho.
Also look on the 50 minutes right here. Imbalance right there. It's a great target as well. And we bounced from a breaker. First confluence. We took out a lot of liquidity already. There a lot of liquidity built up above. Dollar was at the Sunday open was breaking internal lows. The euro was breaking the highs currently as well. I think it's a good target. But let's see. Who knows? Who knows? Playing the probability game. So it's two things. We might be coming back towards an area of the month. That could be one more thing, that we come back down and bounce from there. Then we can secure ourselves at least. But I'm still looking for high. Dollar is not looking strong. I think the dollar can come get that expansion. Put an alert here on the dollar so we get an alert. Yeah, we need to just push through it right now indeed. Push through that resistance layer right there. What about the giveaway? Yes, sir. Mysterious Facts, always on point with the giveaways. Always very sharp. Yeah, that's a good point. We have done it here. Have you guys already done it? Let me know in the chat so we can move forward. Let's do that as well. We're gonna give away first 50 bucks to the winner. We might pull it back to another... Oh, sorry, we do $75. You're right. 75 for 500 likes, 75 for 700 likes, right? Let's do it. Let me know if you guys are done. I give it like 2 or 3 more minutes, and based on that, we move forward from there. Can we please make sure that the person has commented 9 times like the last one? Yes. That was very unfortunate. I need to see that, but that was very unfortunate. That's the case. Making sure that keep it fair and square. I agree. Okay, let's go. I'm gonna pick a winner right here. Let me put
Do you think 50 pip for stop loss is too much? I do not.
Make sure we have the right link. There we go. There we go. There we go. Random Instagram comment picker. Let's do it. Here we go. With this one. Post the link. Are we still in Bali, Lorenzo? Yes. We are in a new house right now. We constructed a new house. I'm gonna do a new house tour very, very soon. I'm excited to show you guys as well. Okay. Let's go. Press the drum. And the winner is $75 for today's sessions, today's stream here. Congratulations, another 75 for 700 likes right there. Who is it gonna be? And did he play it fair and square? Only placing one comment. That's all you need. Let's keep it honest. Let's keep it fair for everyone. Congratulations to Mr. Nice Guy. Mr. Nice Guy 92. Shout out to you, man. Congratulations. You seem like a really nice guy indeed. So you will get the 75 here. All right. Send me a message. Other guys can check it out real quick if you actually placed one comment here just to be sure. Gotta be good. Gotta be good. Congratulations. Up to the next. We give at least a couple $1,000s a month away in giveaways. All right. So it's definitely the case here. Let's also now win that trade. Secure yourselves right there. Next one, you don't have to do anything again anymore. You can just do the same thing here. All right, stick in the Instagram right now. Congratulations, congratulations. We have to give back. If we have winning trades, if we make money, I always want to give back at least partially. Today, somebody helped us a little bit in the community as well. Sometimes the community also places donations and stuff. Definitely use this for the giveaways. We're not really, of course, aiming for donations and stuff. So, no other layer. Next giveaway can be done very, very soon. Let's see what else we have. Let's see what else we have. No, I think it's fine. No, we leave it like this. It's all good. Yeah, we might see, like I said, we might see the euro coming down towards this area of the month here. Let's see, let's see. Johnny says, my sister just joined V2. She was just in time. Just in time because we closed here. I love the community. Yeah, thank you, man. I appreciate it. We are growing very, very quickly, guys. You guys can still join our Discord right now. Tons and tons of value here. We're coming back now towards, and I need to see here. Oh, where are we at currently? We are currently at. Worth it, guys. Worth it to join our Discord right here. 8,783 members, all right? We upload our weekly analysis here. We have our setups shared by the community right there. We are having weekly events for everyone. We have an open mastermind that you guys can join. We have, also the V2 chat. This is more for the guys in the V2 where we have live or private live trading streams and stuff. Where we trade the London as well. So we have actually multiple sessions a day. Tons of events, video series, you name it, it's all in there. So yes, join our Discord. And more information will follow about what we're gonna do in the near future. GT1 is a discover, learn, and with the Limitless Discord, take it to the bank. Do you ever re-enter once it has a lower point and you still have confidence? Sometimes. Let's see where the dollar is at. Okay, the dollar is pushing up here. We didn't break that low here. We didn't also feel that imbalance underneath, which I wanted definitely to see getting filled here, but we're not there yet. We are coming to a very crucial point right now, though, for the dollar, which is this particular level. I really want to see rejection right now at the moment. Super important, because we are at that 10-minute area of supply right now. We're tapping into this area of supply. And if we get rejected there, which is now getting close in like 2 seconds, reaching that zone. So we're closing now. We're getting rejected here. We might be pushing back up here. Lorenzo, hey drawdown. Yes, of course. Hey drawdown. I didn't see a good way to close. I keep a close eye on gold as well. Right now. This could be a good sell right here, guys, right now. I'm just saying. If the dollar decides to break through and push through here. Did you forget the Nasdaq? Not really, but I just don't enter multiple trades at the same time here. Especially not when I'm in a losing trade right now. Couple more, you know, rules for myself personally. I tempted at the beginning to, when I was in a losing trade, to stack my positions then. And then, oh no, I need the next trade. Before you know, I was in 3 losing trades right there. One by one. If I'm winning and I can put my stop loss on break even and I've secured myself, I can go to the next trade. However, I'm giving you guys the heads up for example, gold right now. Definitely have a look at it right here. Every time I come on, it's gold time. Yes, gold is coming very, very close right now. Potential short coming into play, especially if the dollar decides to break through. This is definitely a moment to look for gold shorts right now. Gotta be honest with you guys. It is looking very, very good here. I'm not entering right now, personally. My stop loss is at 110. 110. Probably we get hit right now. There we go. That's a loss. Let me add this in. Then I have to press this button. Okay, that covered our first initial win. We had a EUR/USD win of around 2,200. Now we lost 1,700, so we're up only 500 from that particular pair here. Yeah, part of the game. It added on to my my confluences right here. I will imply that rule. It makes a lot of sense. One time I lost 4 positions. It was, yes, only trade one. If you're a losing trade, I never personally add on another trade on top of that. I wait for that one trade to be finished, and then I might look for the new entry right there. If it makes sense, again, if it adds on to all of my confluences as well here. Did I, by the way, guys, did I add that loss already to the scoreboard? Let me know. Yeah, I did. I added it to the scoreboard. Okay. It is what it is. It is what it is. Let's see what we can do here. We expect already a pretty volatile week in general. Same rules. So if I would change anything or if I would do anything different, my strategy would not work in the long term. I always do the same thing. The same thing over and over and over again. That's why I know it works. I want to know, these 49 trades mentioned in the scoreboard are done on YouTube streaming only. Yes. Not only the winning trades, my friend. Not only the 49, also the 20 and the 17 as well. So 49 wins, 20 losses. A little bit worse than before. So we're going into a little bit of a, based on just the live streams, a little bit in a drawdown kind of period. I think over the last, I'm not sure, I need to count it, but I think that we are quite equal in trades here, wins and losses, over the last 2 or 3 weeks, so something like that. Yeah, so we're still above this. As long as we stay above this level, I'm content. I'm happy. Roughly around this. In the end, winning percentages do not really. Win rate does matter, but in the end, what truly matters is the risk to reward. Obviously, right? This is what makes the most sense, and the net profit on each trade, biggest win and biggest loss. But it's always good to understand that we have done around 69 trades. We actually have done around 17 trades more, but these were break-even trades, so I do not count these trades because they're break-even. There's no win, no loss involved. So we're still sticking around the 71%. So like, as long as we stay around this mark, I'm happy. Around the 70%. It looks very promising, to be honest, for me. I was looking at that flip at around 10:30-ish, roughly. It is usually a time where we see a flip happening in the market as well. Mr. Trades, I don't know why I always catch you losing trades and winning trades. I think you're quite new. I haven't seen you before. So I think in the last 3 streams, we were not really doing well. I think we have only doing well we had one winning trade, gold trade. But I think the last couple of streams, just this week in general, besides and last week, were not the best weeks in my opinion as well. In the New York session at least. This is completely transparent and honest here. Okay. We also had a time when we had 9 winning trades in a row. That we were completely taking over. Well, says with asymmetric returns, your success rate is going to be less than 50%, so don't get disheartened with string of losing trades. I agree. It depends on your risk reward as well. Okay, so the dollar, I want to see where the dollar is at right now, if we are still at the Sunday open. Yes, we're still around this zone here. So as long as we're still below, I keep my same bias. Our gold is definitely starting to weaken here right now at the moment. But let's see, the dollar is suddenly coming down right now. Look at this price action in general. We're still in that pretty much in that whole range. We're trying to catch that move where we expand out of it, but in the end we have not yet. Let me set an alert on gold here. There's not a single error of supply. There is an error of supply. We've created a lower low. It's just about the dollar right now. The dollar needs to continue pushing. Otherwise, if the dollar comes down, that will benefit gold right here. We're not coming down. There we go. Ralph Sabri says, risky trade on gold? Yeah, go long then. Let's see what the Nasdaq is saying as well. Okay, gold broke below that zone. Super important breakout. A breakthrough right here. We had that break, we came up, we had that break, we created a lower low, we tapped into that area of supply and we broke down and we created a new lower low. This is a pretty decent confirmation for me right now. The only thing that matters is the dollar, in my opinion. So we're not there yet. Yeah, a lot of people have a hard time this week during the New York sessions, especially. If you look at the sessions here, yeah, the only thing, of course, yesterday was amazing. We had the Nasdaq was amazing. We had the GJ was good. But the EURjpy we took live on stream was a loss. We took gold, was a win. Euro right now was a loss here. So this week we're on stream 1-2. The 1 win, 2 losses pretty much. So yeah, part of the game. I do expect better price action next week for sure. Better than this week, obviously. We're not done yet though. Tomorrow we have the NFP. And based on the NFP, we're going to find much more confirmation of a direction after that. So we finally have the NFP, and then of course we will have the CPI next week. But the most important part is that the NFP actually came out. So that we actually can start, you know, continuing our regular price action again. Will be streaming NFP tomorrow? I think so. I do believe so. In my opinion, buy is bullish on gold. On the daily, I'm super bullish. 100%. I'm super bullish on gold in the long term as well. Just got a message from the Nasdaq here. Okay, the volatility index is finally coming down right now as well. This is also something that I'm interested in. Like we already talked at the beginning of the stream. We talked about this for a while here. So let's see what's going on there. Gold is coming down significantly here. So didn't enter the trade because it was already in the USD trade. But from here I was like, gold, guys, have a look at gold right now. Now you're going to see that confirmation. Now we're going to come down. Okay. So if you are in a gold trade, I don't know who's in a gold trade right now, but if you're in, secure yourself quite quickly because, you know, during times like these, market can suddenly flip. All right. So be aware of this. Let's go check out the Nasdaq real quick. Okay, yeah, we had the Nasdaq right there. We had the die. Wanted to see closure. And the volatility index is starting to look very, very weak. So it's starting to look better. Hey bro, I'm good, thank you man. Just made 20% of the traded one back to EU loss. Thank you Lorenzo, amazing. Okay, that's great. Yeah, personally I couldn't enter this one, but I'm happy for you. Very, very important. I don't think I'm gonna trade again. All right, just book that loss right now. I'm happy with the profits we made today. I want to stick in my net profit today. I'm fine with what I did today, regardless here with the euro. Sticking up with like $500-600 up in total. You know, overall, yesterday was insane, but I try to stick with try to close my day positive as much as possible and do not try to get my money back or not get into that mentality right now. At the moment, I personally feel internally that I think that this could potentially happen. I tend to just relax, close down my thoughts and actually just step back out of the market. Even though I saw that opportunity with gold, it was very, very nice. Even though it came down, I could say, oh shit, I wish I took it myself. But no, I follow my rules, follow my game plan. And when I see these feelings coming up, I also have emotions as well. I'm like, no, I am going to wait. I'm going to stick with my net profit of around $600 today. And I'm going to sit it out for this session here. So yeah, I think that's it for today's session, guys, right now. All right, I want to keep it clear. Whenever I make a loss, I'm not going to overtrade as well, even though I feel kind of a responsibility towards you guys as well, obviously, to make it happen. But on the other hand, you know, it could be a week where we just experience this, or in general, the overall variance of, you know, 100 trades. You were going to get some losses. We're going to make it happen. So, you know, it gives me the feeling of disappointment. I wish I could do better for you guys as well right there. But I understand it's part of the game. And there's nothing I can do about it because I follow the exact same rules for my. All right. So with that said, thank you guys so much. Looking forward to see you guys next time. Let's get back into that momentum as soon as possible. Because you guys know when we're in that momentum, we're making crazy, crazy numbers. All right. Looking forward to that. Tomorrow, we need to discuss. I will let you guys know exactly what I'm going to do and how I'm going to do it in regards to the stream. If I'm actually going to stream crypto or Forex tomorrow, probably going to trade crypto later for sure. But also Forex because we have the NFP coming out here. So my question is, okay, should I do this in Discord? I'm going to do this on YouTube. I'll let you guys know in Discord what I'm going to do. All right. Yeah, make sure you follow my announcement section in Discord or just look at my YouTube channel and see if it pops up beforehand. And you will find me there. All right. Thank you guys so much. Let's close our at least our stream a little bit nicely. I still enjoyed every single part of it. All right. Giveaway. I'm going to reach out to you. Thank you for reaching out. I saw already that you only placed one comment, so everything good on that end as well. That's all good. We didn't reach the 700 likes today. We are almost at 700. We're at 600 right now. So again, tomorrow new chance to get for the giveaway. $50 at 500 and $50 at 700 if you stream tomorrow during the NFP. Okay? Thank you guys so much. Thank you for all the support on a regular basis. We are here for the long term. Let's continue. All right? Let's continue. Let's reset. End up positive and continue tomorrow and try it again. All right? Peace out. Thank you guys so much. And I'll talk to you guys later. Refund. Raphael, my man, thank you. Lord Blanket, Shang Mei, GT Wardle, Dre, Jonathan, GPS, is his account 100k? Now it's 400k. It's 400k, yes. Arnold, Shipley, John, Marcel, Jackie Rush, Soul Catcher, Norman, Vicky, thank you so much. See you guys later. Ciao, ciao.